Hello friends, today let's talk about Bajaj Finance Limited, a superstar in India's retail lending world and a name that's given compounding wealth a new meaning. Let's see how the numbers stack up. 10 years ago, Bajaj Finance clocked in 5,392 crores in revenue. Now, a jaw-dropping 73,107 crores. That is a 29% annual growth rate for a whole decade, with the last 3 years keeping pace at 30%. Even in the most recent year, sales grew a robust 26%. Growth was steady, with a powerful boost after 2018 as India's credit market expanded and Bajaj digital push brought in millions of new borrowers. Expenses rose from 1,752 crores to 23,047 crores over a decade. Employee cost well managed, holding at just 8 to 12% of operating expenses. Other costs dropped from 24% to around 16%, signaling huge improvements in efficiency as scale kicked in. While interest expense ballooned with strong loan book growth now at 26,005 crores. Profit margins stayed safe thanks to operational discipline. Financing profit rose from 1,367 crores to 24,055 crores, and the financing margin held strong in the 25 to 39% range, currently at mighty 33%. Bajaj Tech and Analytics investment directly show up here, as efficiency boosts the bottom line. Other income remained modest. Most profits came from core lending. Interest expenses reflected the growing book, but provisions stayed under control as asset quality remained high. Depreciation rose with expansion. Net profit rocketed from 898 crores to 17,633 crores, a 34% CAGR for 10 years, with 3 years profit growing 33% annually. EPS grew from 1.79 rupees to 28.09 rupees, a 16-fold jump. Return on equity is 19.2%, a standout for Indian NBFCs. Return on capital employed is 11.4%, reflecting a robust deployment of capital. Debt to equity is 3.74, which is on the higher side, but typical for a higher growth lender. Dividend yield still a modest 0.45%. The company reinvests most profits to fuel more compounding growth. So, the growth pattern for Bajaj Finance is a pure high growth compounding story. No years of shrinkage, barely any slowdowns, just steady, accelerating expansion built on scale, digital innovation, and smart risk management. The biggest hidden gem here is Bajaj's ability to control other operating costs with growth, improving efficiency and boosting margins even as the company multiplies in size. Their relentless digital push puts them ahead of most old school lenders. If this breakdown helped, subscribe to Wealth Growth Club and let me know which company you want next here.